It's the start of a new trading week, and this is a really bad, lackluster Monday morning price action, mostly due to the fact that overnight we had news and our opening candle was this big. This is the first 4 hours of market open, and my analysis, really looking at the higher time frame, we'll just start at the 6 hour, was not to go too high into this daily gap because we're entering a new cycle for the quarter, which is distribution. We started accumulation, manipulation was the dump, and then reversal to the all-time highs, and distribution is next. So I'm looking at distribution to move us lower, and that would contradict what happened today. So looking at the higher time frame, new weekly opening gap here. This is really the highest where I want it to get to, is this gap, this suspension block. But strangely enough, there's so much volume in the market. I just think we're going to break all-time highs and then create maybe a deviation between ES and NQ because ES still has some more room to go higher, but you know what, they both might take it out. Honestly, I'm just kind of amazed that we're moving so much still in a day. Any target is possible. Like if we just look at the daily, look at the volume that's picked up. It's actually been ridiculous. Like this is a daily candle for the year. Now, that's the entire year. And today, this single day has done so much already. I mean, since last week, since the 4th, volume has been crazy. These daily candles are getting ridiculous comparatively to the rest of the year. Like, come on, bro. This is getting out of hand. So I don't really think there's any target that I want to see until we have more price action print for the weekly PO3 because I want to see more price action just in the week so we can trade intraday and get better ranges. So right now I'm just hoping it prints up. The quadrants are of that daily suspension like I mentioned. I think it'll go through all of them to be honest, but like 10:30 was the entry. Actually I want to look at that on the 2 minute again. The 2 minute looked clean for ES. If you're trading ES, 3 minute kind of. No, 2 minute was the one today. And looking at True Microcycle Open, it was a late 10:30 entry. I think would be the best because we're not respecting any like real microcycle cracking correlations. I mean, there is one here, but that's not even the low of M, and so it's like they're not 100% positive. Like they're not the best version you could get. And this right too, this is just internal in the X cycle, and that's like, sorry, in the A of the microcycle, which is not between two. So very insignificant cracking correlations today. Microcycle at the high with YM, but ES sending Q. I was certain that we were just gonna move higher because YM right now is. We'll have to check. YM is. Oh, okay, change direction. That was a late change. If we look at the 10:30, you can see 10:30 was used as a CISD for the direction of the market for the 90-minute candle, and that actually gave a really nice 90-minute wick, creating the quadrants of this. This is what I would do to analyze price back if I missed it, and still what I'd use to support as stop loss and where I'd place my stop loss when I think the body's made when the CISD occurs. So wick is created, stop loss at CE of that. Like this is really nice, honestly. If this was on NQ, I would have taken it. 25 points, leaving it. Plus we have True Microcycle opening at 953, which I really liked on NQ. The TMSO was like a straight immediate for value up tap to the minor for value up we had, but it was one we had. And plus there was just, we were getting breaker, or not breaker, we were getting order block structure just pushing us out. So the fact that it traded down to CE of this 2 minute, and this 2 minute is the only like large for value gap we had, and it's still sloppy, like it's not holding, it's just holding above 10 a.m. And look at the bodies too on that, on the 2 minute and the 1 minute. The bodies are held perfectly inside 10 a.m. candle, and this is the entirety of the candle, but this is the price. So taking away this, you can get more precise when it comes to the new cycle if we're trading into the range again, but still the body. I use the body and the price. So that is how you would have read it. I mean, honestly, safest bet was here or to the CE of the quadrants of the daily. So that's like a 1 to 2.5. If you go to got in earlier, that still would be like a great almost 1 to 3. If you were to put that stop loss at the low, if you were immediately trading like off of the movement out of 10 a.m., then that's what you would trade probably in this. So that's it, really. Review for the day. AMDX. It wasn't clear whatsoever. AMDX was the 90-minute and XAMD for the overnight, which is kind of curious to me because I thought that it would be AMDX. I mean, aside from this movement, but I graded the range and it just like it didn't make sense. I graded the range from London and from discount, and it just really didn't make sense any of the higher time frame pools of liquidity. So I just kind of took that as another confluence to just stay out of the day because the movement's probably already done. Because we had a sweep here with YM, and so I would go on YM range right here and look to see if we like got close to discount, like even just get close to it, and we didn't. Like, okay, so from open it was to here, and look how close we were to discount. If I would have used this as the sweep, we would have hit discount. So I was just going back and forth between that because this is like our discounted sell side, but like we didn't hit it. So, just a confusing day. So confluences to stay out are things just not aligning properly. Like it's looking like you could trade it, but it's just not looking clean. Here's another sign. If we tap into a 15-minute gap, this happens all the time in our 30-minute PO3. This is basically like our um so usually it'll be the 9:45 candle or the 10 a.m. candle. That's our tap into the high time frame. Peter, usually on the 30-minute, it's you tap into a 5-minute, which is right here, and that's your continuation long after. It's like just a one confluence continuation long if you're expecting PO3 open to just go to higher, and I'll show you the RR on that. I actually used to trade this a lot more. It was when the body was turning, so if I thought the body was turning right there, you'd place it at the wick, and this would be something like you enter a mini on because the RR just gets much bigger because it's to the wick. So like 1 to 4 right there for ASIM points until the microcycle got created, like until that candle closed, you could have held for like 1 to 5, 110 points. And that's kind of just how I used that earlier. But now that like I want to catch the daily candle, I don't want to enter on a 5-minute like that. Although I didn't expect to trade today, honestly, but this is like something that I would have taken if I wasn't on the charts as early as I should have been. I needed some sleep. So if I was prepared to size in for that, and plus my copy trader wasn't working, so I just wasn't in the headspace to trade. But if this was a trade I was going to take, plus we had an SMT at that low, right, where is the SMT? Right here initially. And look at that third one. ES swept it. We were already moving higher. So you saw that SMT, and it was staying there on NQ. It did not do anything to that could have avoided or like voided you out of the position or anything. So that just looks great. Let's look for an entry on the 30-second. So after that sweep, if you wanted to like really, really be safe, then wait for that single candle, and then you have an order block to put under. But that just increases the stop. Like after the sweep and after that 1-minute candle closes at 39, then you should be looking on the 15-second for a reversal because it's going to happen really quick. Like if you were already in here, your stop loss would be double and you'd be at 47 instead of like somewhere like 30. Even if that candle closed, like you just put it at that low, which would be like 22, the low that got swept. So that is a great way to catch 30-minute PO3. If you exited just like based on the closing of it, think about this. We're creating the wick at closing, which is about 4 minutes to 5 minutes. It's usually on the shorter time if we're going to have higher time frame trend, but ways to see is if we like do a 1 minute or 2 minute inversion and today we're trading on the 2 minute, then you want to be out by then. So you would have still secured 80 points. So that's something you also want to know because the high has to create a wick, and we're only going to reverse if it's going to trade back into the range, which I saw. Because on the 30-second, it was looking much clearer for price action. So this low is going to be swept, which we swept, and create an SMT with ES to move us higher because the late entry, which was the actual best probability entry, was 10:30. Like right as 10:30 was changing after 10 a.m. about 10:50, which is also the macro time for just ICT concepts, market maker concepts. That is the macro, but is also when true microcycle opens. So that lines up perfectly. That's like almost like the macro is true microcycle open, some would say. So pretty good structure wise, but like for cracking correlations for high confirmation of a big trend, it wasn't there. And that's for that reason, like QT, PO3, market maker models, it's only to analyze what price is doing to predict what it's going to do. And we just predicted that it wasn't going to do much because of the confluence it was giving us. And so that's like, that tells you to stay out of the day, just that alone. So that was how I read price action. If I would have stayed patient, I probably would have taken this trade just because it looked all right for the RR, and I could have sized up on something like that because of the fact that it was just a low range, but the price action was tight together, so the stop loss was also lower. But, you miss a winning day, who cares? And plus, it's a Monday, and we have really serious data on Wednesday. We have FOMC, which I haven't been through in a while. Like we haven't had FOMC for a minute. So that's it. That's it for the analyzation. All right, that's it for reading price action today. I have to actually collect my data, take a screenshot. But I hope you guys stayed out or at least waited for the right time to trade because doing shorts into this range wasn't it. Longing after 10 a.m. wasn't it. 10:30. You had to wait for the retrace after that. Trading into 10 a.m. And that really gave you the rest off of the CE of 10 a.m. in the quadrants because that's where the opening price was. So you can see the precision on the tap back into that, but you had to be patient for it because this wasn't it. You had to wait till distribution cycle, the 90-minute, and you see that's where we're getting our continuation to all-time highs and more probably. So I'll see you guys in the next video and take care.